Welcome investors to the 40 Finance channel. My name's Jeff Beers. Today we're going to look at Apple stock in terms of the recent stock market dip that we've seen here in late September. And while the stock prices of many popular tech stocks like Apple have come down, the question is, though they were up so high, are they really on sale for where they're being priced at today? So that's what we're going to take a look at, use some historical valuations, look at today's price, all those things, and figure out, is Apple really on sale, or should you hold out for a better deal if you think the stock market is going to dip again? Reminder as always that my stock picks and projections, they're just my opinion for your entertainment. Please talk to a financial professional before taking on the risks of investing. However, if you enjoy stock market analysis and going deep on stocks like Apple, then please consider subscribing to the 40 Finance channel. I post here 3 or 4 times every single week, so make sure you sign up to keep track of all the latest videos. And if you're interested in joining my email list, I still have the free 15-minute stock analysis guide that you can download. Link in the description to sign up for that. It's a great report filled with dozens of free resources for you to quickly research stocks and figure out if they belong on your watch list. All right, let's jump into Apple. Stock price at the time of recording here is 109.10. P ratio of 33. EPS right now of 3.30. And with Apple, you've got about a week or so left in their fiscal year. Important to call out that this is all stock split information. So when we look at the 52-week range on the bottom left, that's split adjusted. You had a low of 53.15 and then a high of 137. And we are sitting at 109 today. As you can see, you get a little bonus dividend with this stock, 0.77% of today's price. All right, if you've watched my videos in the past and you're kind of familiar with how we talk about valuations, very simple formula. The price of a stock equals their EPS times their PE ratio. So nothing crazy here. If you can sort of reverse engineer an EPS level and a PE level, then you should be able to project price. Of course, that's never as easy as it sounds because you have to make so many assumptions. But today we'll have the advantage of time because we'll sort of be looking backwards. And since Apple's actually coming to the end of their fiscal year, we have that additional bonus where we're not waiting an extended amount of time for new news or product launches to come out. Speaking of Apple's fiscal year, it's important to note that it runs from October to September. So today's September 24th. They got about 6 days left. The earnings for that year will not come out until probably close to Halloween. Every company takes about a month or so to double check all their earnings, and then they do the earnings call. So for Apple, we're looking around Halloween, and that will set us up for the next fiscal year of 2021. All right, so the first thing we want to pay attention to is the EPS of Apple, and this is from Yahoo Finance. I colored it up, obviously, but these are the analyst projections for EPS. So we're just going to assume, particularly with a big stock like Apple, that there's many people smarter than me, and we're going to use their analyst estimates for EPS. You see in the blue box there, you have the current quarter, which ends in September of 2020. We already talked about it. Long story short, that has remained pretty consistent, the estimate at 70 cents. So we'll call that one flat. Then I want you to ignore the gray box and look at the yellow. You can see how they're connected at the top where it says fiscal year 20. The yellow would be the end of the fiscal year, right? So that's the report that'll come out in Halloween time. And what you have right now from an analyst perspective is you have the current year coming in at 324. That is up relatively significantly from, even 30 and 60 days ago. If you're wondering what the SS is, that's just stock split, right? So analyst projection 30 days ago was $12.97, but that was before the stock split, so you just have to divide it by 5. So I just put that there in case anybody's confused. So right now, analysts are sitting at 324. We only have 6 days left in the quarter. Now, sometimes news leaks and they'll make yet another estimate, but let's just pretend it lands at 324. Follow your eyes to the bottom and you see current EPS, the one on the first slide, is 330. So if analysts are correct, the EPS for Apple will actually drop 6 cents. And that's important because EPS is a big part of our price formula, right? So dropping 6 cents to 324 is going to impact our formula. Now, if you follow Apple a lot and you're starting to think about the fourth quarter, that's what the gray box is that we skipped through. You can see that that is trending up as well. Right now they're at $1.36 or $1.37, depending on which one of those boxes you believe most. But it is trending up. So analysts in the longer term do see a lift to Apple. And if you compare the yellow box to the far right, which is next fiscal year, if they do land at 324, next fiscal year's 387. So what's that? Roughly 20% rise in EPS projected for fiscal year 2021. All right, so we got our EPS. We're going to go with what the analysts think at 324. Now we have to look at PE and be honest with ourselves to answer, is Apple on sale? We have to look at the PE today, look at the PE in the past, and try to figure out what is fair. Not many people would argue that the market is running hot right now. So the question then becomes, like, how hot is it running and how much more are you willing to pay for Apple earnings right now in this period? All right, and this is a PE chart of the last several quarters. You see highlighted in yellow, we have trailing PE and forward PE. If you look across the top there, you can see trailing PE, at 32.49 or so right now. And it doesn't take long to scroll off to the right that you can see that Apple's average PE just continues to climb, right? So off to the far right, I just did a question mark, eyeball average, right? PE of 20 is about the eyeball average. And we had that as recently as March, but of course March, the stock market was in peril. Prior to the country being shut down, and certainly after, we've seen Apple's PE rise to historical highs. Some of these other metrics on here you can see are just as high: forward PE, PEG ratio, price to sales, price to book. Doesn't matter how you look at it. Apple is definitely running more expensive than people have paid in the past. Now, as I always remind folks, more expensive is a dicey world right now, and it's a world that investors are kind of grappling with, right? Because you have basically no interest rates available for savings accounts, or let's just say more secure investments. So we're basically down to stocks and, real estate in some areas to invest in. So theoretically, you might be willing to pay more for some of Apple's growth, just for the lack of options. At the bottom line, though, you just have to ask yourself how much more you're willing to pay for your lack of options before you just hang on to the cash and wait for a rainy day when maybe things are on sale even more so than they are now. All right, so let's take our formula and plug it in. We have our 324 projected EPS times the historical average or recent average PE of 20. Guys, that's an Apple stock price of $64.80. Obviously, nowhere close to today's 109 number. Now, if you scroll down and you take our current PE and you take the projected EPS in there, you know that it dropped about 6 cents, right? It's at 330 today on EPS. Analysts are projecting when September closes and EPS comes out in October, it will be 324. And you take today's arguably overweighted PE and you have a stock price of 106.92. Even that one is $3 less than today's price. All right, so any way you slice it, it looks like Apple at 109 is probably a little higher than most people should be paying, and I certainly wouldn't call it on sale. If the market were to reset at any point and go to, let's just say, historical PEs, then Apple's price would drop significantly, right? Now, I don't necessarily expect that to happen, but if demand shifted and the 33 PE that we're having today, aka the price people will pay for earnings, drops back to what it was in 2019 or whatever it was, down to 20, then your Apple stock falls by almost $45. Again, very unlikely that's going to unfold, but it's something to remember. When you're looking for stocks to buy that are on sale, you also have to factor in which way the EPS is going and how much are people paying for it. Sometimes the PE ratio can actually be a better indicator of if a stock is on sale as opposed to just EPS. All right, so bottom line, hey, no one's going to argue owning Apple in the long term. And this is not a video about selling Apple or being a bear on Apple. This video is simply talking about the last week or so when the market has had some volatility and Apple's at 109 today. Is that a good deal? I would argue that historically, no. It is not on sale as of today. Now, the two things that will get you to a sale price to Apple is probably a PE that's not at today's 33. Maybe it can come down to 30 or the high 20s would be ideal. And then that might start to put you into Apple prices below $100 a share. Then you can start thinking about, well, at least then I'm getting these earnings for a multiple that's closer to what we've seen in the past. The other thing that could happen is PEs could stay the same, and we find out from Apple's earnings reports, right, that EPS is projected to blow up. So I don't think EPS in their last quarter here is going to blow up much more than the 70 cents that analysts projected. But obviously Q1, which is everybody else's Q4 for Apple, huge potential with Christmas time, new Apple phones, all those things. So keep an eye on that too, because that's another way to make gains between a high PE is to raise your EPS. Then you start to meet in the middle a little bit. All right, hope you enjoyed this analysis of Apple stock. Please give me a like and subscribe if you did. Don't forget about the free 15-minute stock report. Link in the description. We'll see you on the next video.